Hey guys, Justin here from Simplified Investing. I wanted to give you guys a breakdown of our plays today and wanted to give you a tip or trick that I use on how to deal with losing trades. So first I'll break down the plays. We had a Zoom 180 call here, closed 2 out of 4 at 360, closed the last 2 at 315. This play actually had really high premiums, causing us to close out the position early simply due to how high the premiums were, and Zoom was still moving the direction that we'd like. However, the option prices were not moving in the way that we were looking or the way that we liked. So we closed that out. Then we had an XOM 38 call here, filled two more at 0.99. We stopped out all 5 contracts because it broke below the support and confirmed on the 5 minute, which happened to be a false breakdown below, which does happen. One thing that people say, like, oh, well, you stopped out too early or whatever, but in what I recommend is sticking to your plan. So I had a plan. I was watching a level. It broke and closed below that level and confirmed below it on technicals. However, it was a false breakdown, which you can't bypass. That does happen. So that's how we stopped out of this one. And then we had another Apple 265 call here that we scalped for 10%. So I will go and break this down here. We'll start off with the Zoom play. So on open, here's what I saw. You saw this nice gap down, this hold here at 153.73. I was watching this to push back through and break here. We actually alerted it right here, closed out profits here on the first two, broke down right here, held that. We actually ended up closing and getting falsely broken out down right here and closed out. I believe it was around 155.94, and then we get that break back through. I should have waited for confirmation here. I did the 1 day 1 minute confirmation, break below. However, you can see this reversal right here that we did miss out on. Again, guys, you aren't going to always execute a trade perfectly. Nobody does. Nobody will. It's all about learning as you go. One thing that I learned from this play is to definitely wait and confirm on that 5 day 5 minute chart. As you guys all know, that's my rule. If I would have stuck to that and didn't make a mistake, look at that play that we could have had. Again, no one's going to execute flawlessly every time when you're trading. You're obviously going to have errors, and today that happened to be one of mine. All you can do from it is move on, learn from it, and correct your mistakes. So the next play that we had right here was XOM. This was another one that I was watching closely. We actually got in the first time right here, and then it had that initial pump up, but with the 125% premiums, we didn't actually see any really movement in the underlying or option price up to here. Now we get this breakdown to here where we ended up closing out right here. These two are reversal setup candlesticks, and we get this push up breakthrough. This 37.19 level was what I was telling the team to watch out for. You can see that rejection now. Now we're heading towards this 36.73 support. This is another one that we did get stopped out on, but stuck to our plan again. Did break below, so I'm fine with stopping out and using proper account management on this position. And then the last one that we played, I'll go up and look at Apple. Apple's another one that we had. First, you see this initial breakdown through here at 253. Then we get this consolidation channel right here, and ended up entering on this break through the consolidation channel. Closed the first one, or closed one here, and then closed 2 out of 3 on this candle over here. So basically what we're seeing right here with a lot of these stocks, and I've been telling the team, is with these high premiums, when you get a lot of side-to-side movement like this, it's going to eat a lot of the premiums up simply because it's not moving as the market anticipates. So what happens is if you have a 125% premium, for example, and you get this consolidation movement, you can still see the movement that you want later on, but it's going to eat the premiums, and the premiums won't push up towards what you were looking for. And that was another prime example of Zoom today. Zoom actually ended up running a lot after we closed out, and the premiums still didn't move simply because of time decay and how inflated the premiums are. As you guys know, with this market volatility, there's so many high premiums here. Like we tried playing Boeing puts today that had 200% plus IV, which caused us not to play them, which IV is really important in the option pricing and something to consider when you're getting in. I typically tell people anything less than 50% is good, but due to this volatility, there's a lot that are over 100%. My recommendation is to simply play light if you're going to play ones with high IV. That's why I posted in our alerts high risk play, especially for Zoom, just because of the inflated premiums. And the one last thing that I wanted to touch on from this, and I get questions about it a lot, is how do you deal with a loss when trading? That's obviously, it's inevitable. Every trader's going to face a loss. As you guys saw, I had 2 losses today, and it's not affecting me any. Actually, losses, in my opinion, are the best learning tool on the market. And you can have proper account management and say have 4 losses and 6 wins and still be up nice. Or you could have 9 wins and 1 loss without proper account management and end up blowing up your portfolio. So what I recommend is for people to have a plan when they get in, and if it doesn't go your way as planned, simply cut out or stop out for a loss. At least you can cut your losses short, look to move on to the next trade, and ultimately use proper account management to help grow your account. And I hope you guys had a great day. Again, just remember that sometimes the best play, as in this case today, is no play simply due to high premiums. Hope you guys enjoy this video, and if you have any questions, feel free to reach out to us. Thank you.